Hey everyone, in this video, I'm going to bring you one growth stock that's down 61% off the high that I think you can buy heading into 2024. I think this stock will benefit from the ongoing consumer trend where they are unleashing pent-up demand for away from home experiences. So come with me, let me share with you what growth stock this is and why I like it so much.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So the growth stock that I'm talking about is Six Flags Entertainment. It's down 61% off the high it reached in 2019. And you can understand that stock is still recovering from the devastations of the pandemic. You'd be surprised to see that it's still not back to where it was pre-pandemic. And that's understandable. It takes time for the company to recover from a complete shutdown of its businesses that rely on bringing large groups of people together. Still, you can see in the most recent 9 months, attendance is up by 9% to 17.9 million in the 9 months ended October 1st, compared to 16.4 million in the 9 months ended October 2nd, 2022. Total revenue is up 5% to 1.1 billion from 1.078 billion in 2022. I suspect this growth will continue for Six Flags in 2024 as people still desire more away from home experience instead of buying things and goods for consumption at home. Six Flags stands to benefit from that trend. Indeed, analysts agree and they think Six Flags revenue is going to increase from 1.43 billion in 2023 up to 1.51 billion in 2024 to 1.58 billion in 2025. That growth is likely to increase its earnings per share from $1.01 in 2023 to $1.98 in 2024 to $2.26 in 2025. But for Six Flags, the operating cash flow is a more informative number because the company spent hundreds of millions, if not billions of dollars up front building the theme parks, and now it's generating cash flow from that investment, but it still experiences a depreciation expense from that money it spent on the theme parks. So there's a mismatch between when the company spent the money, which is upfront to build the theme parks, and when it recognizes the expense, and that is over time spread out as a depreciation expense. So for that reason, I view the cash flow from operations as a better metric, and that's expected to increase from $2.64 to $3.12 to $4.37. Solid growth from this company in cash flow from operations and profitability and in revenue expected over the next few years as consumers continue this trend wanting to get away from home, spend money away from home. Longer term, you can see that Six Flags is still not back to where it was pre-pandemic. 322 million in cash flow from operations in the most recent trailing 12 months. That's still below the near 500 million it was generating before the outbreak, right? It collapsed to negative 250 million and now it's recovering, but it still hasn't recovered back to full strength. I expect it will recover back to full strength and even above that going forward, maybe in 2025, not in 2024. But I expect it will recover to that level given that inflation has increased. And so that's given Six Flags pricing power, relative pricing power. Because if you compare Six Flags, a night at Six Flags or a day at Six Flags with some other things that you can spend money on for a day of entertainment, it's now more attractive because the prices are higher. And so that could lead to higher cash flow from operations once the company is fully recovered. Now, one risk with Six Flags is it does have a lot of debt. It has over $2 billion in debt, but given that it generates strong cash flow from operations, the debt should not be a problem, and it's not an indicator of a bad business. It's an indicator of the mismatch of when the company needed to spend the money, which is all up front, to build out the theme parks, and then it gets cash flow over a long period of time, right? It spent all that money up front, but now it can reap the benefits for a long period of time. As long as it maintains that theme park, those roller coasters, it can generate cash flow from that for decades and decades and decades. And so it's an upfront investment that pays off for a very long time, and it's a lucrative business, and one that I think could be excellent for investors. And Six Flags stock is cheap right now. It's selling at a forward price to earnings of 12.61. That's about as cheap as you've been able to buy this stock for, according to this metric, going back all the way before 2020. In fact, this is about as cheap as you would have bought it during the pandemic when the theme parks were all closed. So you're getting the stock at the same price as the low of 2020. I think that's attractive. Especially when you consider that analysts are expecting growth in earnings per share over the next 2 years and growth in cash flow from operations over the next 2 years. And I suspect even beyond that. I think you're getting a good deal with Six Flags Entertainment Corporation at these valuations. 12.61. If you consider the average stock in the S&P 500 is trading at a forward price to earnings between 17 and 21. So you're getting Six Flags at a much lower price than the average stock in the S&P 500. And the reasons for that is, number one, the very high debt load, the $2 billion in debt. And number two, Six Flags is not going to grow your revenue in the double digits long term, right? You're not going to get 10, 15, 20% revenue growth from Six Flags. This is going to be a mid-single digit, maybe a little bit higher, maybe closer to 8, 9% if things continue the way they have and consumers continue to want that away from home experience. You might get the near 10% growth, but you're not going to get that excitement in terms of growth rate. But you are going to get strong cash flow from operations, and you're going to get the stock at an attractive valuation. That's what Six Flags provides, and I think that's enough. That should be solid for investors. You buy the stock today, you hold it for 5 years, you're likely to end up wealthier than you were when you made the initial investment. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.